Now, I've discovered something about the US markets that has become very predictable, and I'm starting to focus my whole strategy around it. Now, I used to be like Larry. Larry is a consistently unprofitable trader, and the biggest reason why is he isn't looking out for a specific pattern, important times to trade, or indicators that will give him an idea of what the market might do. He doesn't wait for the market to fit his strategy, he tries to fit what the market is doing. Now, Winnie is a trader that knows what it takes to be consistently profitable. He knows pretty much every day at around 30 minutes after the US market open, it will make a directional decision that he could potentially profit from. He has specific patterns and movement he looks for to confirm a trade entry, and when the market doesn't fit that, he just moves on to the next day and waits for his setup to show up. As aspiring traders, we all want to try and be as close to as Winnie as possible. Now, the important thing to remember that just because you know that at around 30 minutes after the US market opens that it could reverse and have a big move, that doesn't mean that that's necessarily going to happen. This is something Larry would do. He would take this information, go to the market, and just bet that the market is going to reverse without waiting for confirmation steps that someone like Winnie waits for. The biggest factor that Winnie waits for is the market to hit a key support or resistance level. This combined with timing gives the market a very strong potential to reverse, because the market could just continue with a current trend that it's in. So you want to combine these things together, give us a bigger picture reason of what the market could do. The way I do this is looking at a chart. You can see that the market here has made clear bounces. And so all I do with that information is I say, okay, well, the market's made clear bounces off this level. That's how we can draw a strong support level off of. And then from there, you can say, okay, well, when the market comes back down here again, it's likely to reverse off that area again. And so what I like to do with this information that Winnie has given us is I'll go to a 1 minute chart and then look for a potential buy. And so what you can see here is this is just an example in hindsight I want to show you, is that for me, the market opens at 6:30. And then right here at 7 o'clock, I would say the market right here set up a really nice head and shoulders pattern. And then right at that timing, right at the support level and that timing, the market just took off from there. The next catalyst Winnie says is important is making sure the market has an exhaustive move. Think of the market like a rubber band. If the band gets too stretched, it has to snap back to equilibrium. The market will do this as well. So look out for times when the market stretches too far, because it will cause that snap back, and this can surprisingly line up with the 30-minute timing more often than you think. And to show you a great example of that, look at this chart right here. We have the market at about 7 o'clock, 30 minutes after the open, and take that timing with a grain of salt. It doesn't have to be exactly at 30 minutes after the market. It can be 10 minutes before, 10 minutes after. You know, there's some wiggle room at play, right? Nothing in the market happens exactly right or exactly the same every time. This is definitely a rough idea, but if you take into account, we have that timing of about 7 o'clock, and then we have a resistance level you can see up here. Again, that's drawn from a 15-minute chart right there, just to give you a quick idea of what that looks like. You can see the market just bounced up here multiple times, come up again. Totally plausible that the market will go sell off from that another time. And then the third thing is that rubber band effect. You can see the market rocketed up here pretty quickly, and it's kind of had that move here as well. And so it's definitely extended from where it has been. And so we can expect the market to kind of at least snap back. And sometimes, you know, this rubber band effect right here is pretty small. And so it might only go here. But if this rubber band right here snaps back as well, you could be catching a very big move. And so that's exactly what happens here, is you can see the rubber band snaps back into place, and you can see it pretty much just gives that all that back up. And then you can see as well, because it did it, this was essentially a rubber band effect as well. It did the exact same thing. And then the market kind of sitting around not sure what to do. And so that is another thing you can add on to make this that much more effective. Now, one thing that Larry often does is when he tries to execute this strategy, he will see things start to line up and get really excited. He knows there's a potential for a massive reversal to happen. And so he jumps into the trade, not wanting to miss out on that potential reversal happening. But the market will just keep trending and causing a loss. What Winnie has realized is you need to wait for confirmation that that current trend is over, because you don't want to fight a trend that is already in place. So you need to wait for that current trend to be broken. A super easy way to do this is looking at just a simple trend line. You can see the market had a clear uptrend into this resistance level up here. And then as soon as that trend breaks that trend line and gives a good sell signal, that's when I jump into a trade. And then there, I wait for that rubber band effect to snap the market back into my favor and give a really good profitable trade. So let's walk through a full trade example of what this looks like and what I look for as the final confirmation to actually execute a trade. So you know kind of A to Z of how to find these trades. So this is an example from a trade I recently took where the market, if we just go through that checklist, we have a resistance level up here that I drew from a 15-minute chart. And then looking at a 1-minute chart, I analyzed the trend. And so what we can see here is the market opened up right here at 6:30, kind of went higher and then had a rubber band effect. You can see by these 3 candlesticks right here, it had a massive move up. And then we can also draw that trend line right here just to kind of see and make sure when that uptrend is broken, because the market can totally come up here, kind of consolidate, have a little bit of a pullback and keep that uptrend going. You never know if this is just really strong momentum and it's going to keep holding, or if it's going to be that rubber band effect. You can totally have trends where it's just super strong and it has strong moves and it keeps going. And so that's where making sure the trend is broken will keep you out of those types of losses and traps that the market tries to throw at you. And then the last thing I like to wait for is what I like to call a pullback or some kind of retest, where the market comes down here, pulls back, makes an attempt to keep going higher, because I want to kind of see this, you know, again, this could just be an uptrend. It could be a pullback in the uptrend. I want to see this pullback here attempt to go higher and then actually fail and start to go lower. And so that's what's happening right here, right now. As you can see, the market is attempting to go higher. And a lot of the times I like to wait for more of a larger pullback for it to come maybe up here. But with these rubber band effects, sometimes they can happen pretty quickly. And so with this trade, I got in pretty quickly. And so what I like to look for though is I always want a large candlestick as confirmation. And so if I slow it down a little bit, this is that confirmation. You can see the market comes down, makes a quick pullback, and then makes a really strong red candlestick that's really rejecting that price. That is enough confirmation for me. And then I just bet that the market's going to have some kind of rubber band effect here and go lower. And so, you know, from there, I managed to trade, let it play out, and take my profits, move on to the next day. Now let me walk you through a couple mistakes that can potentially happen with this so you can try and avoid having losses when it comes to trading. And so here is another really clean setup where we have our uptrend. You can see the market's broken it. There's a resistance level and I jumped into a trade. There's actually a pretty good move up here as well, which has caused kind of a potential rubber band for the market to give that back up. And then of course, looking at the timing, again, 7 o'clock-ish is our timing. We're about 7:10, totally good there. Everything is setting up properly. And so one thing that I do with my trading is I'll jump into a trade once everything aligns up, and I'll be nervous about the trade failing. You know, a big thing for me is the fear of it not working out. And so I'll want to reduce my risk to either break even or, you know, get out of the trade as soon as possible. The problem with this is sometimes the market can take a while to get going. In this example right here, I've moved my stop loss down as the market moves down here, because, you know, this looks like it's starting to move down in a nice downtrend here. And so it's like, okay, I'll just move my stop loss here, you know, take a little bit of risk off the table. And then, you know, as it starts going to my favor, it has a big candle here as well. My thought is, you know, once you're in trading, you get very emotional and it's hard to control that. And so I'm thinking, okay, here's another little pullback in this little downtrend. We have this little downtrend line that we have here. And so the thought is, if it breaks this, well, I think it's going to come all the way up here where my original stop loss was. And this is what happens when you kind of over manage a trade. You don't know what the market's going to do, right? You want to let that big picture idea play out when it comes to the market. And the big picture idea is we have a timing and all these things line up for at around this time, the market might have a large move to the downside. And so you can see there, my trade got knocked out because the market had a little bit of a pullback here. And in reality, this still looks good to go down. The market, you know, it's just kind of chopping here. It's clearly lost this upward steam and movement, and it's going into a sideways trend, slightly down, you could actually say. And really, I think that's good in terms of looking at, okay, well, we're losing strength and momentum. And so it's likely that the market might just continue that downtrend and eventually it'll start to really lose all that strength of that uptrend will go out, because what's happening here is there's kind of a supply and demand of buyers and sellers, you know, people wanting to get in on this trend, but then also people like me betting that it's going to go down. And so that's why the market kind of goes sideways here. But once those buyers dry up, because, you know, once you see the market doing this, you're not going to want to get in long anymore. You can see it starts to collapse like here it does here. And so that's a big mistake that I think is important to try and avoid, because you can see the market then really move down, and that would have been a really nice swing to capture. And it's done that kind of rubber band effect that we were talking about as well. So there are two crucial concepts that will keep you away from being like a loser Larry and making mistakes like I did here. And in this video right here, I'm going to show you more real trades, walkthroughs, and teach you what those two key concepts are.